Earlier today, I told you how our government has totally failed to keep up with the American oil and gas revolution. But in a clear sign that the invisible hand of capitalism really does work pretty well, our corporations have been all over this domestic energy boom. I know I've recommended the oil producers with major shale exposure ad nauseum. So tonight, I'd like to introduce you to a new way to play our country's oil and gas renaissance. I'm talking about Basic Energy Services, BAS. A little $1 billion oil service company focused on the U.S. onshore market that's seen its stock rally a remarkable 71% year to date. BAS provides cradle-to-grave support for its customers' well site activities. It's everything from completion, remedial services, well servicing, fluid services, even a bit of contract drilling. They're able to compete in a market dominated by huge players like Schlumberger, Halliburton, and Baker Hughes because BAS has a lot of exposure to old-fashioned vertical wells, whereas the big three are much more focused on horizontal drilling, the newer method of getting oil and gas out of areas that were once believed to be too hard to reach or too expensive. How has Basic Energy Services been on such an incredible tear? A lot of it has to do with where the company operates. 43% of the revenues from the Permian Basin, which is currently the hottest oil play in the United States. The company also has some nice exposure to the Rocky Mountains, the Mid-Continent Field, South Texas, and Appalachia, all areas with lots of oil and nat gas liquids. Meanwhile, there's a big pickup in activity by private exploration and production firms, giving a major boost to the vertical drilling and pressure pumping markets, which make up a substantial part of the company's business. Just last week, Basic Energy Services reported a strong operating data for May. They also had a very positive analyst day, May 29th. However, the stock got slammed back on June 10th after BAS announced a 6 million share secondary on behalf of a major investor that wanted to ring the register. Who can blame them? DLJ Merchant Banking Partners. Stock dropped 6% from $27.76 down to $26 in a single session. Even after today's 82-cent rally, it's still more than $1 below where it was when they announced the secondary. Could this be a buying opportunity? Is the stock running up so much this year that it's too speculative? Let's take a closer look with Roe Patterson, President and CEO of Basic Energy Services. Mr. Patterson, it's great to have you on Mad Money.
Jim, thanks for having me.
All right, well, you are, I tell you, you're in the sweet spot with the Permian. I feel like that we're the only people who actually believe in the Permian, but obviously you're in there for a full go. Is it possible that Mr. Sheffield from Pioneer's right when he says the Permian may be the second largest oil field in the world?
Well, it's certainly possible. The Permian is the gift that keeps on giving. We keep finding more production and more zones to open up with the new frac techniques and the new drilling technology that's come about recently. So it's certainly possible.
Now, why is it that the country continues to underestimate what we have, whether it be the 1 million barrels a day in North Dakota or what could be and even 2 million barrels a day coming out of Texas? Why?
I think we're just a quiet industry. We've been doing this for a long time, and the recent gains that we've had on production levels is quite extraordinary, and it just hasn't been something that the mainstream really finds that interesting, I guess.
That could be. Well, Mr. Patterson, we've had Jim Brown from Halliburton. He's president of Western Hemisphere, which is always a title I would like. And he has been saying, every time he comes on our show, he looks into the camera and he says, we need more workers. How can you compete against a Halliburton or a Schlumberger to get workers when the unemployment rate must be so low everywhere you work?
Well, it's tough. It's a competitive wage environment for sure. We have to match or beat wages with every competitor, large or small. So the mom and pop companies can be extremely competitive with us as well as the mega cap companies. So we have to be competitive for wages wherever we operate. That's the name of the game.
And is earnings okay, say, out a couple of years because of that? Are we going to start seeing margins get squeezed because you have to pay so much for people?
We're usually able to pass things like a wage price increase or wage increases and those input cost increases onto our customers through rate increase with really very little pushback. So as long as we don't upset the dynamics of the industry and get all of the costs too high and margins get pinched too much for our customers, usually those kinds of costs can be absorbed easily.
Excellent. Now, I was looking at your map where you have a significant presence map that your handouts are fantastic and very clear, diversified customer basis. And I was noticing my source that I get a lot of stuff from is called RBN Energy. And they are saying, listen, it is time to start solving the mystery of SCOOP in Oklahoma, that maybe SCOOP is much bigger. And then I look at the map and you're there too.
That's right. A lot of our customers have had some pretty extraordinary production results there so far. We're definitely being asked to mobilize more equipment to the scoop, and so we're meeting that demand and that request from those customers, and it's a growing area for us, there's no doubt.
One last question. I'm concerned. I know that there is a backlash, and I understand that Colorado, for instance, may have something on the ballot which says that it could limit drilling. Are you concerned, as someone who is extracting natural resources that can be used to make our country energy independent, are you concerned that there will be many moves on many ballots to block what you do for a living?
Well, it's definitely a concern. Anytime there's added regulatory pressure on our industry, it's a concern. It can constrict our growth and really it can kill business to a degree. So it's definitely a concern. The one thing about our industry I would say is that we're pretty good at navigating our way around new regulation, engineering our way out of those problems. So I don't feel like it's going to be a big issue in the near term, and long term I know we'll find a way to engineer our way around it.
Well, you got a terrific story. Thank you so much, Roe Patterson. That's Roe Patterson, the president and CEO of Basic Energy Services, BAS. I've got to tell you guys, I think companies like this are going to have many good years, even though people always think they're 1 quarter away from being finished. Mad Money's back after the break.